The European Central Bank lowered its growth forecast for 2013 to negative 0.4% from a previous estimate of 0% growth. Furthermore, this year's inflation forecast was cut to 1.7% from 1.8%. Joining me down the line to discuss the possible market implications is Robert Wood. Now, Robert, the ECB's monthly bulletin reiterated most of Draghi's comments for April. It did state that the lower inflation reported of 1.2% in April allowed the ECB to cut the interest rate. However, there has been the suggestion that the rate cut is too little, too late in terms of juicing the Eurozone's economy for the near term, but the symbolic value of the easing speaks volumes about the central bank's expectations. Do you agree with this?
Well, in this case, the ECB seems to have gone further than expected. It said it would be monitoring incoming data closely and was ready to act if needed, which is one possible signal that further action could be coming. In any case, the benchmark rate isn't really the issue here for the ECB. The key monetary problem holding back major parts of the economy is lending to small businesses. Key players there are going to be the governments, which will probably take a while for them to step in, so don't expect anything too soon. I mean, ultimately as well, the key is to keep Germany on side so that the bond-buying firewall, Draghi's I will do whatever it takes, remains in place. The bottom line for us really is that with the worst of austerity almost behind some peripheral countries and the global economy likely to regain momentum, the Eurozone will probably stabilise and start to turn up pretty soon.
Some analysts have said disinflation is a real and present danger, and it may lead to outright deflation in Europe if the ECB doesn't take stronger measures to combat the negative momentum. But what do you think?
Well, for us, as I said, we think the Eurozone will stabilise and return to growth in the coming quarters as uncertainty begins to fade, the global economy begins to pick up a little bit of momentum over the summer, and austerity begins to recede. So that should also turn, or at least stop unemployment rising further and stop inflation falling further. I mean, the weakness in inflation as well has a lot to do with Easter. So inflation is running a little bit below the ECB's 2% target, but not massively so. So I don't think deflation is a clear and present risk for the Eurozone right now.
You mentioned that Germany is key in the future of the Eurozone. There has been the suggestion that it could almost single-handedly bring the Eurozone out of recession. But is Germany really capable and willing, do you think?
I think that's right. The key change in the Eurozone came with Draghi's commitment to do whatever it takes to hold the Eurozone together. And key there was keeping Germany on side with that policy. I mean, any hints that Germany isn't supporting it anymore would remove the confidence that has engendered in bond markets. You can see Spain and Italian government bonds yields falling sharply since then. So I think, yes, it really is. It is key what Germany says and does.
Talk of dovish monetary policy and lower growth is usually euro negative, but most of the bulletin's comments were already apparent to the market and therefore did not affect FX trading too much. In fact, the euro rose a bit in the minutes following the release. But what is your outlook for the euro edging through quarter 2?
Some modest further strengthening, I would say, for the euro. I mean, ultimately, currencies are always a game of who looks the most ugly, and over the past year or so, the Eurozone has looked frankly pretty ugly, which is why the euro has been quite weak. But as the Eurozone starts to improve again, I think the focus may well turn to other countries, I mean, like the UK, for instance, which are running huge current account and fiscal deficits. The ECB is appearing to be quite a lot more hawkish than the Fed as well. I mean, after all, it is the only central bank not to have bought any government bonds recently, any major central bank. And it doesn't look like it's going to either. So I think all those things point to a little bit of euro strength over the next few months.
Robert, thank you very much. Well, that's all from Robert and myself for the moment, but click back to Dukascopy for today's press review with my colleague Thomas Taplin. Goodbye for now.